Everyone, welcome and thank you for joining us this evening. Tonight I have with me Leena from Leena's Tax Services. I will give an introduction in just a moment. While we let everyone in from the waiting room, I'm just going to go over some of the basics, and that is that when it comes to webinars such as this, and particularly webinars with regards to taxation, it is very important to note that this webinar is for educational purposes only. It's based on current interpretations of Chinese tax regulations. And as an expat, your nationality, your domicile, your residence, your length of stay in China all play very important roles when it comes to dual tax treaties and tax residency. And it's important to note that you could also be tax resident in more than one jurisdiction at the same time. So thus, any information you gain from this webinar is not to be taken as individual advice. It is very important that you reach out to either Leena or myself, and I can put you in touch with Leena, to get advice based on your personal circumstances, your nationality, domicile, tax residency, length of stay. A lot of that will affect the actual advice. So do not take advice from this webinar as advice for yourself. It is purely for educational purposes only. Thus, any content or material contained in this webinar should not be construed or taken such as legal advice, tax advice, investment advice. So please do keep that in mind. It is very important that you reach out if you do have any questions. Right, a bit of information on who we are. I am Matthew Turon from Holborn. Holborn as a company, we are a independently owned, independent financial advisory. In fact, we are the second largest globally, with several $1 billion in terms of assets under advisement, with licenses and offices in over 18 different jurisdictions spanning the globe, coming out in the Far East, up at the bottom, out of Australia into Hong Kong, Vietnam, Malaysia, Thailand, coming through into Mauritius, Saudi Arabia, Dubai, into Africa, South Africa, Namibia, Zimbabwe, into Europe, Portugal, Cyprus, Spain, the UK, and out into the US, managing, as I said, several $1 billion. And because of this reach and size and our expertise dealing with a lot of expats from across the globe, it gives us that leading edge when it comes to structurally advising clients on how to hold wealth and how to create wealth and protect wealth from unnecessary taxes. Hence why we're having this webinar today with Leena joining us from China. Little about myself individually. I am a senior associate with Holborn, and I specialize specifically in the international market. I'm a cross-border financial planning and investment tax specialist. I have a very unique knowledge that comes from having worked in the UK and many parts of Asia for a very long time, well, for many years. My familiarity with different tax regimes and regulations is as important as my physical and practical experience of having lived in these different countries, which helps when it comes to advising clients from across the globe. As part of the Holborn team, I'm able to offer clients a very large, much wider selection of solutions to help grow and protect wealth from things such as currency depreciation, unnecessary taxations, government repatriation, the key thing being that structuring of investments and being able to take advantage of double tax agreements and your own personal circumstances. In terms of qualifications, I have passed both my level 3 and level 4 chartered exams in the UK. I have postgraduate tertiary qualifications in tax and tax law. I have a national diploma in financial management. I have advanced level qualifications in financial planning, estate planning. I've also passed my regulatory exams in South Africa, where I have recently moved back to. Joining us today, we have Leena, the co-founder of Leena's Tax Services. Leena is a tax professional with a background in financial management and nearly a decade of specialized experience in the tax industry. She holds both her intermediate accounting qualifications as well as being a tax agent qualification certificate. She has worked for many years specifically dealing with expats, helping and assisting foreigners in China with their tax settlements and also with their tax refunds. She is driven by that passion to help the expatriate community, being married herself to an expat, and has grown her business tremendously over the past few years to the point that she has more than 7,500 different expatriate clients across China. So she's committed to providing that professional and reliable service, and someone who I personally often refer many of my clients that are Chinese based to her. So, Leena, if I may hand over to you for a brief introduction about yourself and who you are, and then we'll take it from there.
Sure, thank you. So I will share my own PPT. Is it okay?
Yes.
Yeah, sure. Everyone see the PPT?
Yes, we can see it.
Okay. Hello, good evening, everyone. I'm Leena, and it's great pleasure to be here discussing individual tax with you all, and really happy everyone attending this now. So before we start talk tax, please allow me to do a short introduction about myself and my company. So my company specializes in assisting expats in China to do their tax settlement and refund. Also, we help people doing the social insurance refund, documents translation, offer legal consulting service as well. And the beginning in 2021, I helped my husband get more than 15,000 tax back from 2019 to 2020's tax. He is come from South Africa. Then he think a lot of his friends don't know the tax settlement and refund and all. So we start help his friend, and then friend recommended friend. More and more people know us. In 2022, we set up the company and help expats all over China to do their tax settlement and refund. We make sure they get maximum tax refund legally. And if they have to pay some extra tax when do the tax settlement, we will make sure they pay the minimum amount and make the tax data totally correct. We handle everything from going to the tax office, assisting document preparation, and online filing to communication with local tax venues. So expats save time, reduce stress, and avoid costly errors. So since we bring money to clients and really trying to help everyone, till today we have got more than 7,500 clients all over China, and the clients number still increase every day quickly because everyone willing to share us to their friends. I wish today some of you can share us to your friends in the future as well. So, okay, this is about me and my company and how we start to do this tax thing. So now let's begin our main discussing. So today we will go into this 9 topics. First is how the individual tax system works in China and what is the annual settlement of individual income tax. Third is what individual tax do we have to pay in China and what are the salary tax rates, and also how to calculate tax. You can get refund or you have to pay extra tax in. What tax reduction policies can expats enjoying? And also we will go through detailed explanation of the criteria for determining Chinese resident taxpayers. Also, detailed explanation of administration for non-domicile individuals and their global income tax obligations. And 9 is how to avoid double taxation. So let's go through first. Let's go through, First, let's go through how the system works in China, the tax system. So let's understand the two systems that company use for apply for employee tax. And another system is individual have to use for their tax annual statement. So employer, they have to use this individual electric tax administration to apply the tax every month for you. They deduct tax from your salary, then apply the income tax and pay it to the tax office through this system. This is called the withholding and prepayment of individual income tax. And then what you need to do is after the whole year finish, the coming March to June, you need to conform your tax and income data in this individual income tax app and do a tax annual statement to complete your tax situation. Then you might get some tax refund or have to pay some extra tax in. So in this process, you have to use all the reduction policies to maximum your tax refund amount or to minimum your extra tax payment amount. So many expats ask us, my company already did my tax, and why I still need to do my tax by my own? They don't understand there are two steps for individual tax. First is company prepay tax to tax office. So the company, they use individual electric tax administration system. Then it's the annual statement for tax. This need to do by taxpayer themselves and use the individual income tax app. Between prepayment and annual settlement amount, usually there have some differences. So you have to apply a refund or pay some extra tax in when you do the annual settlement. So let's think about this way to understand the annual statement. So you visit a restaurant and paid a deposit in this restaurant. Then after a year, you need to know how much you exactly spent in this restaurant. Then make an accounting on it. If you spend more, you need to pay some extra. If you spend less, then you will get some refund. Also, when you do the annual accounting, because you are a long-term client of this restaurant, you might will get some discount for the year. So this is how the annual statement works to make an annual accounting on your tax and apply some tax reduction and get some tax refund or pay some extra tax in and fix any errors in your prepayment record. So after we understand the annual statement of individual tax, then we will know this step is very important. It's a chance for you to claim tax reductions, correct prepayment errors, complete your tax filing, and ensure you pay the correct amount, neither over nor under. So what individual tax type we need to pay in China? Usually for expats, it's the salary. It is when you sign a long-term labor contract and get paid monthly by your company. This is called salary income tax. Second, if you sign short-term or one-time part-time work or service agreements, this income is called labor service income. And you also need to pay this tax when it is deducted in advance. It's charged at 20%, 30%, 40% based on your income amount. But in the final annual tax statement, it will follow the same tax rate as salary tax. That's one of the reasons because there is a difference between payment and final settlement. The third and the fourth are authors' remuneration income and royalty income. So the above four types of income all use the same tax rates of salary income when do the annual settlement. But when they prepay, it's a little different. So it's always cost, if you got these four types of income, then it's always cost some differences between the prepayment and the settlement. And then we have interest and dividend income, property rental income, property transfer income, and accrual income. These four types of tax are 20%. So after know all the tax types, let's have a look at the tax rates for the salary income, because this is the most expense facing in China. So understand the salary tax rates is the essential for you to work in China. So here is the tax rate for salary tax. For foreigners, if you are stay in China more than 183 days in a tax year, then you are a resident taxpayer. You can use the resident tax rule to apply and do the tax statement. So your income will be accumulated monthly by monthly to calculate the tax. It means tax basic on your annual salary, the annual taxable income. So for example, January, your taxable income is 20,000. Let's say 20,000 because most foreigners, they earn like 20,000 to 30,000 a month. Paid so for 20,000, paid 600 yuan tax because for 20,000 you are in the 3% rate level. So it's 20% multiply 3% equals to 600 for the first for the January, the tax will be 600. Then February, your taxable income will be, let's say, still 20,000, but the annual taxable income is accumulated to 40,000, which is for the February and the January 20,000 plus 20,000. So basic on 40,000, you need to pay 1,480 yuan tax, which is, you can say here, the part of 36,000 part multiply 3% and will plus the 4,000, which is in the second level, will multiply 10%. So equals to 1,480. So you can say for the February, you need to pay tax is 1,480. Deduction the first month 600 equals to 880. So February, you have to pay 8,080 tax for this 20,000 income. But for January, you just need to pay 600 for the 20,000, the same income. So it's different. It's a little by a little increase. So you can say its results different tax amounts due to progressive accumulation. This is why your monthly tax payment isn't fixed. And this is why people ask me why I got same salary and now I pay in more and more tax every month. When when your annual salary increase. So it causes the tax amount increases as well, especially when your income crossing into a higher tax rate. So this is resident tax rules. The main point is your income have to be accumulated monthly by monthly, and it's tax basic on your annual taxable income. So the other way, if you are not staying in China more than 183 days in a tax year, then for this year, you are a non-resident taxpayer. So your income don't need accumulated. It's basic on your monthly taxable income. So you just calculate your tax and pay it basic on monthly taxable income. Here is the tax rate you can follow. So for non-resident taxpayer, if your monthly income is same, then the tax should be also same as well. This is many expats sometimes they feel very confused about, because maybe one company use the non-resident tax calculation method, then you will find every month is the same tax amount. Then after you change to another job, another company, maybe they will use resident rules. Then you will find your tax is not same when your income is same, and your tax might will increase or not, while 1 month when your income jump to another level. So after we understand the tax rate, let's have a look of tax calculate method. So today maybe a lot of you don't have too much tax or accounting background, so it might will be a little difficult understanding how to calculate the tax. So I will just do a short explain for it. We were just talking about the annual statement calculation, because prepayment always deal with by the employer. So how to calculate the annual tax payable amount? The annual income deduct the basic fee, which is fixed amount 60,000 yuan for a year, which is 5,000 yuan for a month. Then have to deduct some reduction that you can enjoy. Then you get your annual taxable income amount. So not all your salary is be taxable. Just after all the deduction, then you got the annual taxable income amount. And then you have to find the matching rate from the tax rate Excel. Just now we said the tax rate. So the annual taxable income multiply the tax rate, then deduct the quick calculation deduction. Let's say here is the quick calculation deduction amount you can follow. Then you will get your annual tax payable amount. So you compare it with the prepaid tax amount, which is your company deduction from your salary every month. Compare with that amount, then you will know you will got differences. Then you will know it's the tax refund or the extra tax you need to pay in. So the main point is apply all your tax reduction items, make you can get more refund or pay less extra. Usually if you are changing your job in a tax year, or you work for 2 or more companies, or you change job, then the company switching the non-resident to the resident status. these situations might will cause you pay some extra tax in when you do the tax annual statement. So, most expats, they found they have to pay extra tax in when they changing job. But this is not for sure. The exact situation still have to do the data calculations. So after understand how to calculation the tax, you need to compare the annual payable tax amount to the prepayment. So after this, we have to know the tax reduction that expats can enjoy. So you can use when you do the tax annual statement. There is two different policies. One is special additional deduction items and tax expat allowances for foreign individuals. You can only choose one of the policy to enjoy. So usually for the tax expat allowances, need your employer to do it for you. But if employer didn't help you get this reduction, then can choosing special additional deduction items when you do the annual tax statement, which is like housing rent, children's education, child care for infants under 3, and supporting elderly parents. Usually for foreigner is these 3 items.
So quick question, sorry, back on that previous slide,
Sure.
Leena. Can the admin at your school or your company, can they choose from both of those, the special as well as the tax exempt, or do they need to choose from one set or the other when it comes to claiming allowances or deductions?
Yeah, you can only choose one of this. But if you choose the housing allowances, then you can choosing other items in this box. But if you choosing the elderly support, then you can only choose these things, these items in your reduction. For example, you cannot choosing housing allowances, then choosing the elderly support, but you can do the housing rent deduction, then choosing the elderly support. The difference is the housing rent is a fixed amount, but for the housing allowances, it might be different amount, like how much your company gave to you, then it's this amount. But for housing rent, it's a fixed amount. So you can only choose one of the box
Or the
reduction.
other?
Yes,
Okay,
yes.
so if I may say, and this is where you'll notice that Lena said usually, and the problem with this is something that I found from experience as well, and something that you'll find that most expats have issues with. Very often, the person in the admin office who's doing this on the electronic system, sometimes they will just look and they say, well, this is for Chinese residents or for residents, and they'll assume, well, you're not a resident because you're not Chinese. They don't realize it's got nothing to do with what passport you hold or what nationality you hold. It's got to do with whether you're tax resident or not. And they may not think that you qualify for any of these allowances or exemptions because they think that, well, it's only for Chinese people, which is why it's important that you actually do your own tax at the end of where you do that calculation yourself, that extra check, or get someone like Lena to help you do it, because otherwise you never know whether you're actually claiming the allowances you're entitled to and whether you're actually getting the best deal or not. I mean, if you're getting a housing allowance of 5,000 RMB, or let's say you're getting a housing allowance of 2,000 RMB, but your rent is actually 5,000 RMB, you're only claiming the two because you're claiming from the wrong box when you could be claiming more. It's better to have someone like Lena actually make sure that you are getting everything that you're entitled to. And something that we found from the previous webinar is that the majority of the people who attended had no idea whether they were even claiming the allowances or not. And that's something that was quite a bit of an eye-opener for myself. I thought maybe now, having moved on in terms of years and the fact that life has gotten a lot easier in terms of translations, that people would be a little more ahead when it comes to taxes in foreign countries. But it seems most generally still aren't. What I'd like to do now is I'm going to launch before Leena moves on to the next part, I'm going to launch a poll. And the idea of the poll is that when it comes to webinars like this, it helps us to understand who is on the actual call, and it helps give us some better, insightful information. Things such as, particularly in a webinar like this, how many people actually do their own taxes or get a company to do it, or just let their schools or employers do it? How many use AI to do their taxes instead? How many have no idea whether they should or shouldn't even be checking their taxes every year or doing that second part, not just the first electronic part that the employer does, but that you yourself have to do your own reconciliation at the end of the year. And that you are able to claim exemptions or deductions. So it helps us to understand that. It also helps us to understand when it comes to others, particularly for myself, when it comes to people sending money home and abroad, when it comes to international taxes, whether you're getting the best value or whether you're unnecessarily making money that is tax exempt taxable. Most for expats such as ourselves around the globe, almost all countries will exempt foreign income. And you have double tax treaties, which will assign who has taxing rights when it comes to things such as interest income, dividends, capital gains. And you may very well find that your investments and your savings back home, set up by someone back home who doesn't understand expat taxes, could very well be making an issue for you where you're paying tax that you don't need to be paying. So this is where these polls sort of help us, and it helps us to then focus future webinars in terms of making it a little more appropriate. So I'm going to launch that poll again now so we can see from this one, how does it differ from the previous one we did, so we can fine tune things going forward. So please, I do encourage you all to take part in terms of that poll. And then Leena, you are welcome to, let me see if I can get back to my Zoom. You are welcome to continue again on your side. So please do those polls.
Sure, I will 先
Can you
oh,
share your screen again, Leena?
sure. Is it can see my screen
Yes,
now?
we can see yours.
Oh, great. I will continue it then. So just now we finished these two reduction policies. So we will go through this. So now we will go to understand the tax. We will already understand the tax rates for salary, the meaning and the importance of the annual tax statement, and some of the benefits you can get. Let's move on to talk about how to determine if you are a Chinese resident taxpayer or not. So first, there are two main sets of rules. One is the domicile standard. The other is the residence time standard. For the domicile standard, we look at four things. Household registration. So do you have legal household registration in China? So for this one, most foreigners, they don't have, because only the Chinese citizen, they can have the household registration. So another thing is family ties. Where do your spouse, your children, and other family members mainly live? And then economic interests. In which country are your main assets, investments, and business located? And last one is habitual residence. Which country do you live in long-term and stable? But in practice, the tax office usually use the first point, the household registration, to decide. only if you married a Chinese person living in China for a long time and plan to stay here permanently, you might be considered to have a domicile in China. However, whether you intend to stay long-term is subjective and hard to prove. So the tax office mostly relies on the objective fact of household registration. That means for foreigners, the main rule they use is the residence time standard. So this is very simple. In Canada year, January 1st to December 31st, if you stay in China for 183 days or more, you will be considered a Chinese resident taxpayer. So now let's talk about the global income tax obligations. For expats in China, people always ask, do I need to pay tax in China on my global income if I am a resident taxpayer? So we have understand the rule to determine tax residence. Now let's clarify, when do you need to pay the tax in China based on your global income? There is two main rule: six year and 30 days departure rule. First, the 6-year rule. If you are a foreign tax resident in China for 6 consecutive years, which means this 6 year, every year you stay more than 183 days. Also, no any year you live in China more than 30 days in one time. Then, starting from the 7th year, your global income becomes subject to Chinese individual income tax. The second rule, the 30-day departure rule, provides a receipt method. If you leave China for more than 30 consecutive days in any tax year during those 6 years, the 6-year count resets to 0, and you must start a new 6-year period from the year following your departure year. And another thing is the 6-year period counting from January 1st,
Sorry, we seem
2019.
to have lost Leena there for a. Oh, you're back.
Oh, can you hear me?
Yes, we can hear you again. There was just a brief freeze, but you're back.
Oh, where we lost? Maybe the 6-year rule?
Yes, you just mentioned the 6-year rule and that you need to
Okay.
have made a break for at least 30 days.
Oh, 30 days. Okay, let's continue from the 30-day receipt then. So the second rule, the 30-day departure rule, provides a receipt method. If you leave China for more than 30 consecutive days in any
Sorry,
tax year during those.
sorry, Leena, can
Hello?
you share your screen again? You're not sharing anymore.
Oh, in my page, it's still sharing.
So just perhaps click stop sharing and then click share again.
Okay. I stop share now, and then I start share now.
There we go.
Let's.
Now we can see the 6-year, 30-day reset. Yes.
Okay, great. So we start from the 30-day reset rule. So
Yes.
the 30-day departure rule provides a reset method. If you live in China for more than 30 consecutive days in any tax year during those 6 years, then the 6-year count resets to 0, and you must start a new 6-year period from the year following your departure year. And another thing, we say the 6-year period counting from January 1st, 2019. Years before 2019 are no longer included in the calculation. For example, let's say if you first become a tax resident in 2019 and stayed over 183 days each year through 2024, with no single departure exceeding 30 days, then 2025 marks your 7th year and your global income becomes taxable in China. If you live in China in 2024 and it's more than 30 days, then the 2025 will start a new 6-year period and your global income remains expat from Chinese individual income tax in 2025. So after know this rule, you can avoid to pay global income tax in China by simply planning your departures, taking a single 31 days trip outside China during any of the 6 consecutive years will reset the clock.
So can I add to that why very quickly? So why this is extremely important, and why very often your employer or others won't know about this. It's extremely important because then, if you've been in China for more than what stayed for more than 6 years, and you haven't taken a 31 day or longer, because it needs to be more than 30 days. If you haven't taken a 31 day or longer holiday, and not one where you took 2 weeks in summer and 2 weeks in winter, it needs to be consecutive. So it needs to be 31 days or more in one go. The importance of this is that not all employees are able to take a month and a half off in one solid go. So if you're not able to do that, it then means that essentially your worldwide income becomes taxable in China. And at the very beginning, you'll have seen there was that list of the different types of things that China charges taxes on when it comes to income taxes. And what's important to remember here is that you may very well have savings, investments, and things that you're earning back home, and those things can now become taxable in China. And you should also then be declaring them in China. So you need to know what you have worldwide. You need to be able to keep track of the 6-year rule when you go out. If you've been out for long enough, and if you're not going out for long enough, you need to be able to, and Leena will come to this later on, you need to be aware of double tax agreements or tax treaties. So that when you structure your investments and your savings, you do it in the correct way so that you are able to legally mitigate the taxes. So yeah, the important thing here is it needs to be more than 30 days consecutively in one go, not broken up during the year. And if you do that, you're relatively safe. If you don't do that, then your savings back home, even if it's tax-free savings or tax-exempt savings back home, that doesn't make it tax-exempt or tax-free in China. So you need to make sure things are set up correctly. Okay, Leena, sorry, back to you.
Sure. So we already go through the most topics. Only the next topic is about the double taxation. So, however, China has signed double taxation avoidance agreements with many countries. So, if you pay tax in another country and get a tax payment certificate, even if you need to declare your global income in China, you can deduct the tax you've already paid in other countries. So that's all for today. Hope it's gonna help understand the individual income tax in China. And I also will share the PPT to the host. If you need, can ask Matthew share to you. So if you still have more questions or want to know your own tax situation, you can contact us, and I wish can help you more and on the annual tax statement, and we'll guide you through the annual tax settlement process step by step. And for the by the way, for the 2020 tax refund, we're closing in the end of this month. So if you never did your tax before, better to have a check it. If maybe after this month you will lose your 2022 tax refund. So yeah. Also, there is our company. We do all these things. We can do all these things for you, and you can and our custom service we change. You can follow our official account, and we will give some updates of the tax news in this account. And also, you can scan this mini program to jump to our mini program that can help you to do the tax refund, and it's collect some documents. Yeah, this is all for today. And thank you for your attending. And now we will go through the questions, right?
Yes, brilliant. Before we go to the questions
Yeah.
very quickly, so essentially what Lena's just said, that you can, just because we are now in 2026 doesn't mean you can now only do your tax reconciliation for last year 2020-25. You can still do for 2020, 2024, for 2023 if you haven't actually ever gone and done a reconciliation for those years. I think, Lena, you said the 2020 ends in June, end of June this month. Is that correct?
2022 will close in
2022.
the end of this month.
So
But
if
you
you've
still
not
can,
done
after
that,
this month, you still can apply the 2023, 2024, and 2025. But you will lost your 2022
2022.
tax
So if you
refund.
have never done a reconciliation, I strongly suggest that you reach out to Lena and very quickly and shortly, so you can still get that 2022 one done before the end of this month. And then you are, if you've never done a reconciliation, don't leave it up to your employer. Employers often get things wrong. The amount of times I've seen people where, yeah, it's just been done wrong because you've got someone who works in admin who doesn't really understand tax, and this is how I've done it for everyone else all along, and no one's ever shown me, and this is how we Chinese people do it. So they've never bothered to see, well, as an expat, what exemptions or allowances are you entitled to, or if you're even entitled to them at all. So please do reach out. Okay, so we're going to go into the questions and answers now. There is, if you look on your screen, there's a little box at the bottom which says, it should say Q&A. Yes, there is a little question mark box that says questions and answers. So if you have any questions, please do type them into that box. And then just a reminder with regards to the poll, please. There's just a few people still who need to do the poll. If you can finish that poll, it helps us a great deal. It really does, in terms of us making sure that future webinars are suited, and we can arrange that around the demographics of the people that we have within the call. So if you have any questions, now is the time to ask. We were overwhelmed with questions when we did it during the week 2 weeks ago, and we didn't get round to finishing all of them. I just want to make sure that everyone can actually see, because we don't have any online questions at the moment. Again, there are a few coming through. Some of the bigger questions, if I may just, because I know this was one of the leading questions last year, or last time, not last year. So if I may ask you to go through that because I think that's where a lot of people will have that sort of questions. When it comes to the taxes and the fact that the taxes change every month, your residence tax and your non-residence tax. So the fact, I think many people don't struggle with understanding, Lena, that if you in month one earn 20,000, and then in month two you earn 20,000, month three you earn 20,000, month four you earn 20,000, how can you suddenly in month five be paying so much more than in month one? Many people struggle to understand that it gets added. So 20,000 in month one is 20, but after 2 months you've now earned 40. After 3 months, you've now earned 60. After 4 months, you've now earned 80. After 5 months, you've earned 100. So your taxes now, you're in that 100. So you're in that next, those brackets, the level of taxes increase. Are you able to share that screen quickly, Lena, and just go through that one more time? I will stop sharing.
Sure. Oh, I don't have that. I
There we
just
go.
have this
Yes.
salary tax rate.
Yes. So
Because
that's
your
salary
salary,
tax.
yeah, your salary is accumulated. So every month by every month, your salary is accumulated, and then your annual taxable income will be going to different levels, and then the tax rate will be jumped to another level as well. So it might cost you 1 month if you in 1 month your annual taxable income become more than 144,000, then it's jumped to from 10% jump to 20%. Then that month you might will pay increase tax amount as well for the same salary. Yeah.
So essentially, if you're earning 20,000 a month, then in month one, you're under that 36,000. So you're going to be paying a lot less tax. But by the time you reach month seven, if you're earning 20,000, now means you've earned 140,000 RMB. So now you're not still paying tax at that 3% tax rate. You've actually moved up into tier two, and you've moved up, as you go and earn more money. So now that tax rate is 10%. By the time you reach month eight and you've earned 160,000, well, now you've moved into tier three. So your tax rate becomes higher because you're paying tax on the aggregate, on the total calculation of all the income that you've been earning over the last, from month one all the way through up to month eight, if that makes it easier, hopefully, for others to understand. Okay, so let's go through then some of these questions that we have. First question, Leena, is can I have past refunds reviewed to see if I'm entitled to a larger refund? And I think this is important where you've got someone for, where my employer has done my tax settlement, my reconciliation, and I've gotten a little bit of money back every year, but I don't know if they've claimed the right deductions. Can I go and re-look at that, or is that finalized?
Yes, you can still go to review your past refunds and say, is it the right refunds you have? If you didn't do the right refunds, if you can legally get more refunds, we can still apply for you. But the time is running from the 2022 till now. Cannot do before 2022. Yeah. Before 2022, even you have some refunds, but you don't have the right to apply it anymore because for the tax office, they have a closing time for you for your rights to claim back your refunds. Otherwise, they will have a lot of work to do
Yeah,
many years. Yeah, yeah. That's you
exactly.
can
Yes.
still review your tax from 2022. Yeah.
Okay. And then another question. Please explain the annual tax settlement requirement. So yes, you get the employer that does their thing digitally through their system, but then you have the end of the year annual, we call it reconciliation or annual tax settlement requirement. Can you explain how that works? The annual part.
So yeah, so as we say, the employer they just do the prepayment for your tax. Also, you might will change your job to another employer. So when you change job to another employer, you might have two company income in the 1 year. So all your tax prepayment might be different with the annual statement. So every year you have to do the tax statement to make sure how much you exactly need to pay for this year tax, and to say how much your company, your employer already paid for you. Because in their let's say in their side they will deduct tax from you, but it's depends on their prepayment deduction method. But when you do the annual tax statement, it depends on the annual statement calculation method. So this is different, and you have to do the annual tax statement to make the difference to get a refund or to pay the extra tax in. So this is essential that you have to do, necessary you have to do every year. Yeah.
Okay. And then another question, unfortunately, a question that we saw quite a lot the last time, and unfortunately also something that I find with a lot of clients that I deal with, or I come across a lot of clients where they just don't know whether in fact their taxes are being done or not. And this becomes very critical because if you're someone who plans on staying in China for as long as you can or for a significant amount of time, building up as much wealth and saving as much as you can, if you're not sure of your tax responsibilities and you haven't been doing it, you can end up in a situation. I've seen it with some fairly large clients where, I mean, the worst case, I had someone with 6 million RMB not able to get it out of China because, well, their previous companies never paid any taxes. So the question here then is, I don't think my company pays my taxes. How can I find out whether they actually do or not to avoid penalties at the end? Leena?
So, so first, you can say your company how they pay the salary to you. Will they give you the salary slips? And the salary slips will showing how much tax they deduct from your salary. If they don't do this, maybe they not do good job. And another thing is, if they pay your salary from the WeChat, cash, or Alipay, then maybe they really not do your tax. And the exactly you have to do is get your own tax app, the individual income tax app, register it, and to get in it to say did your because this app is from the official from the tax office, so you can say all the income you earn and all the tax payment prepayment your company did for you. So if inside have the tax payment and it's same as your as your income, then it's right. Then you don't need to worry about. But get the certificate that the company paid the tax for you, because you can get your tax certificate every month or every year. We can offer them to you. And also, if your company really not pay your tax, maybe before you leaving this company, you should ask them to do it, or you write a complaint to the tax office or something. But usually, tax office maybe will help you, or if it's a big amount of the company didn't pay the tax, then maybe it will make a problem with them. Yeah, yeah. This is the
Lena,
thing.
in China, I assume it
Okay.
is the same as with most jurisdictions around the globe, or most countries around the globe. When it comes to taxes, although your employer may be filing taxes for you on a monthly basis and paying taxes for you on a monthly basis, it is still your responsibility from a legal point of view as
Yeah,
the taxpayer to ensure that those taxes are paid, and hence why there's a reconciliation that gets done at the end of the year to make sure that those taxes actually have been paid so you can then
yeah.
claim the refunds or pay in what's not being paid. Is it the same in China, I assume?
And also, I want to mention, especially if you signed a after tax salary with your company, maybe then the company also will not pay tax for you, because the tax then will not deduct from your salary. The company have to pay extra tax from them own, so they maybe will trying to not pay their tax for you if you signed a after tax. So maybe better to sell before tax salary, then
Yeah.
let the company deduct the tax from you. Because always, if you sign after tax contract, you think about you don't need to pay the tax, but of course the company they will deduct your salary to make your salary a little down, to let you accept a down salary to not pay the tax. It's not make many things. Yeah.
Yes. Okay, and then in line with that previous, so this next question then is, and how do you check with that reconciliation? So the next question is, I did not file for taxes in for a refund in 2019. Is there anything I can do? So those deadlines, the June, end of June this year is for 2022. So you can still claim up until the end of June for 2022. You can check for 2023, 2024, 2025, you can do. But 2019, 2020,
Cannot.
there is nothing you can do.
Mm.
It's the deadline's gone
You
already?
can do nothing about 2019 now because the tax office will not give you back the refund. Even you have refund, they will say it's out of the time. You cannot claim it anymore. Yeah.
Then the next one, by paying income taxes, am I contributing to a pension or social security system automatically? Now, I know there have been some changes in law in some of these bigger cities in China where you now have to pay towards the three different parts. In practice, that doesn't always really happen. In your experience, Leena, just because someone's paying in taxes, does it mean they're also paying into the pension and social security
No,
system
no,
at the same
no.
time?
It's separate. So uh, actually, for now in China, the practice, if you sign a contract with the company have to pay you the pension, the social security thing, and also will of course deduct your personal part and also pay by the company part as well. So you will get a lot of benefit on it. But in practice, a lot of
Yeah,
training center they don't pay the social insurance, social security to the for the foreigner, and it's most foreigner they sign complaints or wanna ask a lawyer or something when they leave this company. So no, if you paying the tax, the income tax is most company will pay for you. But the social security is separate. If you can see from your salary slips, if there is a tax deduction and there is a pension medical deduction, then it means your company pays the tax and the social security for you. But if there is just tax, mm, then it means they didn't
yeah.
deduct any pension from your salary.
Okay.
Then it's
Our
easy
next
to
one says this is more of a statement than a question, but it's upsetting to me that none of my employers have ever mentioned applying for a tax refund, especially since I've been in China for 7 years. So this raises two key points, and something that I think I've hopefully managed to bring across. Very often, employers in China and with many of the other Asian countries where I have clients, I've seen the exact same thing and experienced living in some of the others. Very often the person doing the admin doesn't know that you are entitled to those deductions and exemptions, or they are aware of those deductions and exemptions, but they assume that, well, you're not a Chinese person, so you're not entitled to
yeah.
them. So which is why you need to do that reconciliation. So yes, it is sad that upsetting that no one has mentioned that to you before, which is why I reached out to Leena early in the year to say, can we do a webinar? Because the amount of clients I have, particularly in China, where that clearly has not been happening. The other side, more important in terms of this question, is the fact that if you've been there for 7 years, then comes the question, well, have you spent 31 days or longer consecutively outside of China? Because if not, just by not knowing about that 6 year rule, you may very well now have made yourself taxable in China on your worldwide income. So any investment incomes and things that you're earning abroad now can become taxable in China. So you need to be aware that you need to arrange a holiday at some point fairly soon that you can take off more than 31 days if your employer will allow you that. Leena, when clients come to you, let's say someone comes to you and they have been in China for a number of years. So we're not talking about someone who's recently moved to China, has only been there a year or two. How often do you come across people reaching out to you where they've been there for a longer period of time, 5 years, 10 years, and they've never done a
They will do it.
reconciliation
Yeah.
before? Is that common?
It is common actually. Almost people they found us the first time we can do several refund for them, several the years refund for them. So it's very often that people never do their refund. Or sometimes they do their refund but it's wrong, or maybe the company make them pay extra tax in and we have to get them money back to them. So it's very often the company did wrong thing, ask them pay in, or they just get a netto refund, so we can help them get more refund or get them extra tax back. Yeah.
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 Okay, then this next question sounds not right to me, but is there a standard
Standard
deduction?
deduction.
So I'm assuming this person,
Yes, yes.
based on the question, pays a flat fee of 5,000 a month in terms of taxes. Now, looking at those scales, that shouldn't really happen. What is your view on that, Leena?
Yes, this 5,000 RMB not deduction from the tax. It's deduction from your income because all your salaries not all have to pay tax. You can deduct the 5,000 per month to not pay the tax, which means we talked about 60,000 for a year to deduction. So if you earn salary 20,000, then you can deduct this 5,000 first. So it means the taxable income is just 15,000. Yeah, not 20,000 for
So I
all
think
your
in that sort
salary.
of case where someone's trying to estimate the annual income and then ease the burden for you as you go through, you need to do a reconciliation when it comes to that. And then the last question, I see this one is more investment focused. So today's webinar is focused primarily on the tax side of things. There in terms of expats living in China, there are a lot of options available internationally when it comes to setting up your investments. Because again, same as with taxes, it's not just where you live. It also has to do with what passport you hold, where you may one day end up, or how long you plan to be in Asia or in China. If you plan to move to another country afterwards, which country is that likely to be? There's a lot that plays a role when it comes to what types of investments and where, more importantly, one sets up those investments so that you are able to make things as tax efficient as possible to mitigate unnecessary taxes. Very simply, if we look at China, if you don't follow that 6-year rule and you don't get to leave China for more than 31 days, you become taxable on your worldwide income in China. If your investments are set up in terms of a capital nature, well, then what does the double tax agreement say in terms of who has taxing rights on capital gain? And very often China, though, while they can tax capital gain, often doesn't. So there's a lot that comes into that. Way too much. That would be a whole webinar all on its own. But you are welcome to reach out and we can have a chat. Okay, Leena, I would like to say thank you so much. I don't know if you want to share your screen just one last time with your contact details and the QR codes. There we go, just that
Yeah.
everyone can see that. And then just some in terms of the poll. So interestingly enough, similar to the previous poll that we did, while the majority, in fact, more than 80% of people on this call do see themselves staying in China for more than just a year or two or 5 years. So they see themselves potentially becoming taxable on their worldwide income in terms of China. They want to be able to stay there as long as possible. Oddly enough, though, the majority are either not doing their refunds or applying for refunds or don't even know if they're entitled to refunds or not, which is a little concerning. So we've got, what is it, 66% either don't know or just don't bother to claim in terms of refunds or deductions. Again, something where you really could use someone like Leena to help you actually do that. For those who do actually claim, do submit returns to see if they can get refunds, their 67% actually do get refunds. So the takeaway, I suppose, from that is if the majority aren't doing it and don't know it, but the few that who are doing it are actually, the majority of them are getting refunds, then it is something that you should really look into doing. And then quite a few people there too, Leena, that would like to reach out to you or would like you to reach out. So I will make sure that you have all of that information. Right. Thank you, everyone. Leena, again, really insightful and really valuable information. I think the most important thing for me in terms of takeaway from this is that end of June, so June 30, that deadline for 2022. So if you've been working in China in 2022, you have until the end of this month to get Leena to help you have a look at that reconciliation to see if you're entitled to any refunds. And then for 23, 2024, and 2025, obviously, you still have time in terms of doing that.
Yeah.
As with anything, though, leaving it to the last minute is never the best thing. All right, Leena, thank you. I appreciate your time, and hopefully we'll do this again fairly soon. I think it would be really valuable for those out there who just don't know, and evidently from the last webinar and from this one, the overwhelming majority just don't know or didn't know. All right,
Yeah.
thank you, Leena. Have a good evening on your side. Thank you to everyone
You
who's attended.
too.
Have a good evening, and we hope to see you again soon.
Yeah.